Staying with China, how will its lingering economic slowdown impact the rest of the region? Moody's Analytics Chief Asia-Pacific economist Steve Cochrane joins us now from Singapore. Steve, great to have you with us. So which factors are basically contributing to this slowdown in the Chinese economy?
Well, there are actually quite a few. There are many imbalances that have built up over the years in the Chinese economy. I think the first one worth mentioning, the one that is probably the most difficult to deal with and has the most linkages to the rest of the economy, is simply the downturn in the property market. The fact that through a number of measures several years ago that were meant to limit overbuying of speculative housing units, demand for housing has fallen quite a bit. And then because of that, developers have lost a fair amount of liquidity, with loss of income, and have had a difficulty in completing construction projects. There's a big oversupply of housing in China right now, but perhaps the most important part of the property development imbalance is the fact that there's a lot of housing projects that are semi-built that have stopped. They haven't been completed. But because the method of selling units in China over the last few years has been through pre-sales, selling of units before they're built, and households who take out a mortgage make payments even before that unit is delivered.
So Steve,
what's happened is now that with things coming to a halt, homeowners who have that kind of a mortgage have simply stopped making payments.
So
it's brought things almost to a complete halt.
Steve, I'd like to jump in here. So with your concern about this worsening property slump, which has also led to weaker consumer spending and tumbling credit growth in the mainland, could this lead eventually to a recession in the Chinese economy?
Well, leading to recession, that's a difficult call, only because normal growth right now is somewhere around 5%. So even if you slow down quite a bit, China may still be able to eke out 1%, 2% growth based on some of the existing industries that are still growing, some of the technology.
But quarter on quarter, that could also lead to a contraction in the economy.
So what it would lead is to higher unemployment. It would lead to slower income growth and then even slower consumer spending. What's happened right now is that consumers have become really tight-fisted, at least in terms of buying goods because of the uncertainty in the economy. So they're just saving. The saving rate is going up and up and up. In a sense, that's a good thing. There's a lot of savings stockpiled, but it's hard to think about what might flip the switch and drive consumers to spend again. And if the economy slowed down considerably so that it felt like a recession, certainly this slow period of consumer spending in the domestic economy would continue.
So with a slowdown in the Chinese domestic economy, which is, of course, the second largest in the world, second to the United States, is this already having an impact on many Asia-Pacific economies? The Philippine economy slowed down from 6.4% to 4.3% in the previous quarter. Is the Philippines and the rest of ASEAN already feeling the effects of the China slowdown?
So the effect of the China slowdown has been felt really throughout the Asia-Pacific region through the loss of trade. The demand for goods, because the manufacturing economy has slowed down, both because of a lack of domestic demand and the broader global economy slowing down. There's a little demand for imported inputs that go into that the many manufacturing processes in China. And that includes the Philippines. There's been a downturn in electronic products and electronic components that has hurt the Philippine economy. There are other issues in the Philippine economy as well. High interest rates have slowed down consumer spending, and spending by the government has kind of been on again, off again, if you will, and has led also to a little bit of a slowdown in investment spending in the Philippines. So the trade with China is one important piece of the Philippines economy. But there are multiple factors working towards that slowdown that you mentioned in the Philippine economy as well.
So Steve, can Asian economies like the Philippines use the Chinese slowdown to its advantage in some way?
Well, I'm not so sure it's the slowdown that one could use to an advantage, but the fact that a number of companies are working to reduce their concentration risk, if you will, of being in China and trying to and expanding investment into other areas of Southeast Asia and other areas of the world as well. South Asia is one. India and in Southeast Asia, Vietnam are probably the two countries that have benefited the most from some of this diversion of investment in China. A third country a long way from here is Mexico, actually, that has been able to attract a lot of investment that might have otherwise gone to China. So what this does show is that there are opportunities, and there are opportunities for other countries in Southeast Asia to open themselves up to provide the kind of support that companies are looking for as they're looking for ways to, again, reduce their concentration risk in China.
And Steve, briefly, there are winners and losers in the slowdown of the Chinese economy, but what will Chinese officials do at this point in terms of monetary policy or fiscal policy to jumpstart the economy yet again?
So this is a difficult thing for China because China is used to working on improving the supply side of the economy, of spurring manufacturing, of spurring investment and so forth. But now the issue is really more on the demand side of the economy and consumer spending and demand for housing and such. So if they do anything that might be very, very useful and effective, it may be some work towards providing some stimulus towards consumer spending and towards encouraging households to leverage some of that savings that they built up over the past several years.
Steve, thank you so much for your insights on the Chinese economy and its impact on the regional economy. Steve Cochrane of Moody's Analytics joining us from Singapore.